SMCI just released their preliminary earnings and, well, guess what? It's lower than previously expected. Surprise, surprise. At the time of making this video, the stock is down 15%. It has also dragged down a lot of other semiconductor players. For example, NVIDIA is down around 2% after hours. So now for SMCI, we're back around $30, which means that in the last 12 months, the stock is now down closer to 70%, and year to date it has now turned back into negative territory. And remember, at one point this stock was actually up 100% year to date. Now it will have a market cap of around $20 billion, a little lower than that. Of course, from a PE standpoint, trailing or forward PE, it will look very cheap, but remember, margin wise, it is a very, very low margin business. As you can see, gross margin of 12.4%, net 6.9%. Revenue growth, I mean, it's still very, very good, still expected to grow quite fast. But then again, if every single quarter revenue comes in much lower than previously expected, if every time we're going to have full year revenue come down by a couple of $1 billion, well, we can't really trust those forward-looking projections. Right now, the average analyst price target still sits much, much higher than where we are at right now. It sits at $50. So what exactly is going on here? Does it make any sense? Can they still reach their, well, fiscal year 25 guidance? And what about fiscal 2026 guidance? Remember, they think that in 2026, revenue could be $40 billion. So let's talk about all of that in this video. If you enjoy this type of videos, hit all the buttons. We really appreciate that, especially the subscribe one. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so in order for you to understand the full story, let's go back to the preliminary numbers for Q1 fiscal year 2025. So net sales was in the range $5.9 to $6 billion, came in closer to $5.9 billion, which is of course lower than the $6 to $7 billion that they projected, which means midpoint $6.5 billion. The actual numbers came in $500 million lower than expected. Okay, then for the second quarter fiscal year 2025 guidance, they said the following. They expect net sales in the range of $5.5 to $6.1 billion for the second quarter, and GAAP net income per diluted share of between 48 to 58 cents, non-GAAP net income per diluted share of 56 to 65 cents. Okay, remember those numbers, 5.5 to $6.1 billion. Well, if we go and look at the second quarter numbers, well, that came in at 5.6, 5.7. So again, towards the lower end of the guidance. The guidance was 5.5, 6.1, came in at closer to $5.6 billion, still growing quite quickly year over year. So okay, the growth rates here were fine. There definitely is a lot of demand. There's no denying that. As for GAAP and non-GAAP diluted earnings per share, a GAAP came in at 51 cents, flat year over year. Non-GAAP at around 59 cents, reflecting just 5% year-over-year growth. And here as well, GAAP and non-GAAP gross margin in the range of 11.8 to 11.9%. So yeah, definitely not a high margin business. Now, they did talk about fiscal year 2025 revenue to be in the range of $23.5 to $25 billion, which is much lower than the previous guidance that they gave us, which was $26 to $30 billion. I mean, that's quite a big shift, right? From $28 billion at the midpoint to around $24 billion at the midpoint. That's a $4 billion decrease. $4 billion. Pretty big deal if you ask me. And then they also talked about, well, this paving the way for $40 billion in revenue in fiscal 2026. How are they going to do that? Remains to be seen. Now, for the third quarter, they expected net sales to be in the range of $5 to $6 billion, which of course gives you a midpoint number of $5.5 billion. Well, let's have a look at what they're expecting right now. So, a couple of points here. They said new generation product design wins are robust. During Q3, some delayed customer platform decisions were moving sales into Q4. the GAAP and non-GAAP gross margin for Q3 was 220 basis points lower than Q2, primarily due to higher inventory reserves resulting from older generation products and expedite costs to enable time to market for new products. Okay, an explanation, an excuse, that's up to you. But net sales, remember, prior guidance, $5 to $6 billion, which means $5.5 billion at the midpoint. Guess what's the number right now? Well, you guessed it, it's $1 billion less. $1 billion less, so that's expected to be $4.5, $4.6 billion. GAAP diluted net income per common share is also expected to come down drastically, now between 16 to 17 cents. Previously, that was between 36 and 53 cents, which is already quite a big range. Non-GAAP between 29 to 30 cents, so 30 cents at the midpoint. Prior guidance, 46 to 62 cents. So here again, huge miss and huge revision on the downside. Now, what happens when you add up all the numbers? For Q1, $5.9 billion, Q2, $5.6 billion, Q3, $4.5 billion expected. Well, for Q4, to meet the fiscal year 2025 guidance, right, the midpoint of around $24 billion, well, in Q4, you will need $8 billion in revenue. Is that feasible, do you think? I mean, I don't think so. They never came close to a number like $8 billion or even $7 billion. Now, yes, as you can see, in the last couple of years, couple of quarters, year-over-year growth looks amazing. But yeah, if we continue like this, if next quarter is $4.5 billion, then the year-over-year growth here is not amazing anymore. It's okay, but it's not amazing. So yeah, how are they going to reach that full year 2025 guidance? Remains to be seen. I mean, there's nothing about a full year revision right here, but I fully expect that to be revised down quite heavily in the next coming weeks when they report their overall quarter. Plus, if we go back, that 2026 figure of $40 billion, is that going to be revised down? Maybe. Remember, last time, well, the time they gave us that number, the stock went up because that was a huge increase, right? That's an increase of $16 billion from the midpoint 2025, which again, I don't think they'll achieve. Let's say in Q4, they go back to $5.5 billion. That's still quite a lot less than the $24 billion that's expected, and especially quite less from the $28 billion that was expected a couple of quarters ago. So although we have no issues anymore with the listing or anything like that, we certainly still have trust issues with management. Now I might say, yeah, but maybe revenue is lower because of, well, the restrictions on China, etc. Well, if we go here and look, by the way, FinChat, do check them out. 25% off only for this week up until Thursday, and then we're back to only 15% off. So check out the link down in the description and in the pinned comment. You can help yourself out and myself as well. Plus you'll get 2 weeks of FinChat Pro for free if you're a new member. Now, if we look here at Asia revenue, last quarter, that was 13% of overall revenue. So even if China is an issue here, even if that's the case, how big of an issue can that be if that's only 13% of overall revenue? That's only $768 million, and that's Asia revenue. Doesn't say China revenue or Taiwan revenue, that's whole Asia revenue. It was higher previously. I mean, back in the June quarter, that was above $1.2 billion. So now it's a bit smaller. So yeah, I mean, they'll probably use every excuse in the book. But to me, as I've said in the past, there are still some trust issues. Now, one winner here could be Dell Technologies. If we look at Dell Technologies Infrastructure Solution Group revenue, last quarter that increased 21.6%. Of course, here as well, growth did decelerate. Previously, I mean, it was quite easy to grow quite fast because the same quarters a year prior, those were negative growth quarters. So we'll see what happens, but Dell definitely has a lot of momentum, doesn't have that many issues like SMCI also got plenty of mentions from Jensen and NVIDIA, so I would expect Dell to pick up some lost business for SMCI and maybe HPE as well. Who knows? Now, all in all, if we want to discuss the businesses here, like I said, these are low margin businesses. Dell is a bit higher than SMCI. If you look at 2024 gross profit margin for Dell, that was 22.4%. If you look at SMCI, that's at 13.75%. Then if you really want to look at free cash flow margin, well, for SMCI, that's basically negative. And for Dell, that was 1.96%. So really nothing to be that proud of. Now, is this going to be an issue for the likes of NVIDIA, AMD, and all the other players? To be honest, I don't think so. Otherwise, we would have heard something already from Intel, for example, and we would have maybe had a preliminary report come out from NVIDIA if there is going to be a big miss. So far, nothing. So no, I do think that this is just the market overreacting to the news. No, not for SMCI, but the others that are down a little bit. It's just part of this news, I would say. And so I do think this is just a company specific issue. So all in all, that's about it. If you still own SMCI, I guess you still have quite a lot of questions that need answers. If you don't own it, well, then you don't own it, then good job. So that will be it for me in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.